Hello, everybody. Thanks for being here today with us. And welcome to our Macro Break webinar, our monthly market update with Jacques Lemoisson. As you know, this webinar is hosted by Quantilia, the data management and analytics platform dedicated to wealth managers and institutional investors. The subject of today's webinar is dedicated to 5 illusions crashing into the wall of reality. And to reveal the secrets of these illusions, let me pass it now to our speaker, Jacques Lemoisson, the well-known global macro and quantamental expert, active for 20 years in the industry banks like Lombard Odier and CBH. And last word, Jacques will speak during approximately 25 minutes, after which we will take questions. So don't hesitate to post your questions through our system, and we will answer them at the end. Thank you very much. So, Jacques, I leave it to you.
Many thanks, Katerina. Everybody, hello. I'm very happy to be there for the second time. I decided to change a little bit the process of this webinar and just to address different topics. Like that, we will be able to have some common ground to have a deeper Q&A. I share my screen just to show you the slide I prepare. Just to be more consistent. I hope that these charts will raise some question. Okay, first, US presidential election. In 4 weeks, it will be the biggest event of the year. Sadly, I'm very afraid that we will not have any real outcome before this date, okay, meaning end of December. And apparently the market is not pricing that at this stage. The last limit will be the 6th of June, okay. The second stuff regarding the US election, it's the rhetoric from Trump will be more and more dedicated to very single type of person in US. As you can see, this is the economist Hugo Pool. I put some integration points in some part of the chart here. Mainly, Trump will address only male, less educated people with an average income, okay? That's why all the video that you saw yesterday when he came back from the hospital was all the rhetoric, all the speeches, all the comments that he will post in tweets and so on will be mainly addressed to this kind of people, because for female, for graduate people with high income or very low income, mainly Joe Biden is far away in advance. That's why it's really this kind of documents is quite important, just to explain how Trump will communicate during the next 4 weeks. But this is only polls for voters. The main topic for me will be the difference between the comparison between the Democrat and Republican stimulus plan. Obviously, Trump, due to this slide, communicated very hardly yesterday night, saying that he has to stop all the negotiation at the Congress level. Of course, during the night, due to the drop of the equity markets, he just backpedaling a little bit, saying that the small business head on a stimulus check could be an agreement with the Democrat in the coming weeks. At this stage, you have to bear in mind that no decision will be taken at the Congress level till the 19th of October due to the COVID of the president, okay? Mainly the main difference between the Democratic plan and the Republican plan is regarding the state and local aid, of course, and of course the stimulus check. But you saw that for the voters, all the investment banks are talking about the blue wave. This is the map, not for voters, but for electors. I think the blue wave is not so clear than that, okay? Of course, we have the swing states, and the toss-up in these states are very important, mainly Florida. But of course, the Texas is at this stage in favor of Trump, but it's close to be toss-up, okay? And this map is quite more important than all the pools for voters. Electors are more important for the elections. And as you can see, Trump is, the score is closer than people expect and that the market is expecting. This is for the US election. For the FANGMANIA, I wanted to share some very interesting study just produced by McKinsey. This is just the adoption acceleration of the technology due to the COVID. In few months, globally, the adoption acceleration just is about 7 years, 10 years for Asia Pacific, and 7 years roughly for European or for the Occident. This is quite important to understand that we are on the all-time high in the Nasdaq. Now we have mainly gained 7 years, a few months in terms of adoptions, meaning what we are pricing at this level for the Nasdaq. Now we gain 7 years in few months. Okay, meaning that perhaps it's the future is perhaps could be closer than people are thinking regarding the tech. This is the weight of the FANGMAN in the performances of the S&P 500. The blue line, it's the green line, it's the S&P minus FANG, meaning we are in negative for the S&P 500 year-to-date performances. And this is the market share of the FANG in the S&P, 25.5%. And now you have plenty of correlation charts in internet, meaning the two main are the Nasdaq in 2020 versus the Nasdaq in 2009, or the Nasdaq in 2020 versus the Nasdaq in 1999. It's raising the biggest questions that we have in the market. Could it be possible to have a second big leg of uptrend in the market? If we see that, obviously the answer is yes, but I have this chart. Honestly, it's if you don't want to sleep at night, you just you have a look in this chart. We are there, okay? Honestly, it's quite scary at this stage. Even if at the beginning of the year, in my positioning, I was long Nasdaq and long VIX at the same time. Now, since end of August, I am short Nasdaq now, because honestly, this is quite amazing. And this chart is quite important, I think, for the future. This is the second topic, and of course, now what we could buy if we are short in Nasdaq. Plenty of people are talking about banks. Due to the valuations, banks are lagging all the indices around the world. Mainly, we are seeing some interesting charts with the SX7E. It's the European banks, Eurozone banks, and perhaps we could have a breakout there. The German 10 years seems to get back to life now. We have the same in US with the XLF. It's the ETF, the financial sector ETF. On the US 10 years, we are seeing some tension in the yield. Of course, people are saying that if there is a steepening, okay, this is a good environment for banks. Many times the correlations was positive, but honestly, when I'm seeing this is the consumer discretionary index on the consumer sentiment. As you can see here, it's ex-Amazon, okay? Because Amazon is driving huge consumptions now. But the index minus Amazon, just demonstrating that the sentiments, the sector is overplaying what the sentiment is showing. Or we have to pay attention to that. Another chart very interesting is the Chase consumer card spending tracker. As I'm writing every day in my global macro insight, I'm a strong believer that we are in square root shape in our recovery. This is exactly the shape of the Chase consumer card spending. On the banks without consumer, it's complicated in terms of turnover on benefits. And we have also the bank. We have to manage the huge wall of downgrades and also bankruptcies. Okay, in October we have a huge number of companies announcing bankruptcies. The banks will have to manage a huge default in credits. They already, in the first quarter and second quarter, they already announced a huge amounts of provisions. But anyway, I think the wall is just rising now. This is, you have to bear in mind that this is easy to see the markets like that, okay? But honestly, we have to pay attention to these charts and also to this one, okay? This is quite crucial to keep this in mind. After geopolitical tensions, it's, for me, it's one of my main concern, because at this stage we will have this kind of events will have a huge influence. Mainly, if you back to this slide, it's the victory of Biden is not guaranteed, and definitely we have to think about the victory of Trump. In this case, this topic will become very important. This map is showing one of my main concerns regarding Taiwan. As I wrote many times, what's going on in Hong Kong is will continue. Backpedaling is not a word very well known in China, mainly when they're talking about geopolitics. They will not get back in Hong Kong. Now Taiwan, for me, you have to think about what is Taiwan. Taiwan is not only an island. This is the main base of the most influent semiconductor company named TSMC. Honestly, China realized with the trade war initiated by Trump 2 years ago that they have big issues in their semiconductor supply chain. One of the solutions will be to take the control of TSMC, just to strengthen their supply chain in this sector. And you have to bear in mind that this is really the focus for China on Taiwan. The second, it's regarding Turkey. For me, the chart is very sad, because it's just demonstrating that the Eurozone pays 6 billion euros to Turkey to agree to host migrants from Syria. Now the European Eurozone just gave the humanitarian bombs to Erdogan with the detonators, and it's very sad. Now there is tension with Greece. Honestly, when I saw the distortion in local politics in Europe with only 1 million refugees, I think it's scary if Erdogan just decide to let go 5 million refugees in Europe. And we have to keep this in mind because the issue is not solved. Also, I don't mention that there is the gas field here. This is mainly huge tensions with Cyprus, Greece, Turkey. We have the Lebanon. It's a very hot spot, and we have to keep this in the loop. The third real new tension, it's the Karabakh area. We have to pay attention to this, what's happening there, because usually there is a very constructive relationship between Turkey and Russia. But in this case, they are not fighting directly, but indirectly in these regions. I hope that something will happen in a positive way, because we have also for human being, of course, but we have some huge pipeline crossing these regions for the Eurozone. We could have you could have some distortion in the gas on all the petrol or the oil coming in Europe, and we have to pay attention to that. And I will finish because I promised to talk during 20-25 minutes. I will finish with this chart. This is the mystery chart. And I hope that you will raise questions on. If you have a constructive answer, I will be happy to get it. Beginning of the year with drop of the market due to the COVID and the implosion of the supply chain, we had a huge amount of cash, of inflows coming in the money market funds. Okay, fine. And after we saw, kind of outflows, okay, but mainly benefiting to government bonds on corporate bonds, okay, but equities, mainly nothing. This is, for me, scary for two things. First, when the market dropped here by 35%, no really purchase in equity in terms of flows in equity funds, okay? Meaning that what will happen if we have a drop by 35% or 40% next time? The first time, no really purchase. During all this period when the market just skyrocketing on the new all-time highs, the same, the flows in equity market just was really shy, I should say. It's raising bear in my mind. Okay, we know that the Robin Hooders, the Retail Army, plus the options, of course, due to all the huge purchases from SoftBank during the summer, and also the constant flow of the Robin Hooders. The retail now, the weight of the retailers in equities flow in the US just reached 35% now of the total market, meaning that it's huge. Meaning that, okay, investors are not putting the money there. The optimist just will be able to say that, okay, meaning that you have a huge power of cash just could be flowed in the equity funds and just could be built the famous second upward trend, okay? But I'm not convinced about that. I really think that if during the first drop the flows didn't come back in equities, I'm not quite sure that the second one, if you have a second drop, this kind of architecture of the market will stay the same, meaning that the guys will not put any cents in the equity. Meaning that if there is no buyer on only seller, due to the configuration of the market with plenty of trend following algorithm, room doers, because they learn to play the market on the downside via a short ETF, leverage short ETF on options on the sell side. They could also put a huge pressure on the market with no buyers at all, because obviously the buyers during the first leg of drop in February and March was not there. This is for me the main scary environment, because market don't pay attention about when we will have the name of the US president. And when I'm seeing the structure of the VIX, honestly, okay, we have the top of the future VIX term around here, but honestly, we should have on the answer of the outcome of the US elections not there. That's why this is not priced in the market. We should pay attention to that. I finish my short presentations in 25 minutes, roughly. That's why I'm super happy. And now, if you have some questions, I will be happy to answer to any question that you have.
Thank you very much, Jacques, for your presentation. We have received several questions. The first one, what is the main position in our global macro allocation? Thank you.
To be very clear, the positioning is now very on the dovish side. I continue to I pursue the barbell approach, meaning that we have to take some risk sometimes on to try to catch the cheapest tail risk hedge as possible. At the beginning of the year, it worked well, because to be long Nasdaq and long VIX just produce a huge income in my allocation. Now I am long short in US, mainly long pharma and infrastructure and short Nasdaq. I'm still long VIX. In Europe equities, I am short. I am long A-shares, Chinese A-shares equities. In credits, I am short Atrax crossover. I am now short 10 years. I think that we cool back to 1 or 1.2% for the 10 years yield. In the commodity space, I am long short. I am long precious metals, and I am short oil on the industrial metals. And I am long also break even. I am long steepener.
Okay, thank you very much. The next question I have, what do you mention geopolitics when the market doesn't care about?
This is a good question. Honestly, I know that geopolitics was very, kind of a fancy stuff that people can talk about during two hours, and nobody knows at the end of the speech if we have to sell, buy, run to add you in the cave or something else. But for me, now with Trump, okay, with the capability to be very angry and very intrusive, I should say, in some area, I think that we have to bear in mind mainly for that, okay? I'll try to explain you that we can draw connection between a geopolitical event on the stock market, for example. Taiwan is a good example. Okay, Taiwan is not an island only; it's just the main base of the most powerful semiconductor group in the world. Meaning that if China or another country take the control of this little island, we take the control of all the semiconductor in the world. This is a demonstration that if you don't pay attention about geopolitics, if you don't pay attention about the forces behind the front page of newspapers, sorry, you could miss some huge downturn in the market, mainly, or opportunities also, because this case could be negative by some way in the market, but sometimes geopolitics are able to show us some positive outcome, I should say. But in this environment, it's crucial to always be able. This is the main strength of my concept, to draw connection between the geopolitics and the real investments ideas.
Okay, I see. Well, and the last question we have received, what are the scariest positioning in the market?
Sorry?
What are the scariest positioning in
Okay,
the market?
yeah. I think is that I show you. I hope you see my screen. Okay. Okay.
Okay, yes, fine.
It's this one. Up. This one is the positioning of the Nasdaq. This one is the scariest. In terms of positioning, all the ETFs, funds, even if some investment bank like JP Morgan and Goldman Sachs are showing some charts demonstrating that hedge funds are starting to unwind some position in FANGMAN. Honestly, it's just stellar. Okay, I was in the equity market in 2000. Honestly, now even if PE price earnings are not stellar like in 2000, honestly, the weight of this sector in all indices are very scary for me. All the investors are stuck in these companies, and the first big seller that we initiated a downtrend, it could be very nasty for all the indices, all the ETFs, all the pension funds, for everyone. And I'm very scared about that. This is for me. This is the main. And after the other, I think the other is this one. Is the banks. Perhaps we could have banks there. I just take my laser point. Perhaps one day we could see the banks there. Perhaps there is a gap open there. I think the bank could be back. But honestly, when I'm saying the consumptions now, Germany just announced some kinds of lockdown now. Now in the curfew, they announced a curfew. Okay, France is locking down some the bars and so on. We have plenty of announcements like that. Schools in New York, some schools in suburbs, they are just locked down. Honestly, I'm very afraid regarding the consumptions, because now people will be very, I should say, injured by layoffs, by bankruptcies. On the market just didn't discount that in variation. I think it's the two most scary stuff for me. It's what will happen in banks if the consumption is dragging down, but also the bankruptcy on these two charts. The two charts. Okay, the downgrades in credits on the bankruptcy, it just will be massive in the coming weeks. Even if we have a small COVID plan from the Congress on the positioning in the Nasdaq, I think it's the two scariest positioning for me.
Well, I see. Anyway, dear participants, do you have any questions to our dear Jacques today? Still, I didn't. It was everything that I received for
Okay.
today. If no questions, I think that we are really in time for this webinar, and it's
Yes.
great.
Hmm.
Um, Thank you very much, Jacques, for your presentation, and hope that we just find it out about these illusions crashing into the wall of reality, and we know
Yes, no
more
problem.
about.
Just for all the attendees, you have my contact through LinkedIn or through Quantilia. Definitely, we can raise some question after. Okay, I write my global macro insight every day. That's why it just this is just a channel to communicate. On the goal for me is just to share views on. Please don't hesitate. Just send your questions. On it's always interesting to not to fight, but just to raise some points and just to discuss around. Okay.
Yes,
Have a
to
great
share.
day, and I pray that the US election is not too chaotic. Okay.
Yes. So thank you very much. Keep tuned. Follow up us on social media, on LinkedIn, Quantilia, Jacques Lemoisson. We will keep in touch and we will inform you about our next webinar soon. Thank you very much for your attention and see you soon. Thank you, Jacques.
Bye
Bye.
bye.
Have a great day. Thank you. Bye bye.